What's up? What's up? Did you miss me last week? What's going on, everybody? Well, interesting day. Not a total surprise. You had markets opened higher. They're going to close somewhere near where they opened last night. But you had that big drown in about I don't know about an hour ago or so. I guess there's talk that there's going to be a rate hike instead of a rate cut. Oh, nice to have you. Welcome aboard. Uh, and hey, look, again, at the end of the day, I mean, how can they possibly cut rates? Okay, the whole rally, which has been built on potential rate cuts, but how can they cut rates with inflation going bananas? Okay, uh, that's true. That's true, Mister Wisconsin John. Super Bowl Green Bay Packers next year. But again, we're getting a little bit of a run here at the end of the day. But again, there's always news items. It was very slow, and this morning when we traded live futures, very quiet, not much to do. We did have four trades, but again, there's a lot of things going on, and we keep hearing about how good everything is. But I'll ask you guys: is everything good or no? Forget about who's the president. Just in your own personal financial situation, is everything good or is it not good? That's the question. Okay. Because I think it sucks myself, but again, that's just me. Fortunately, it's not a problem for me, but certainly I know that many are struggling. Many are having to work multiple jobs to get there. And of course, then we got this protesting crap going on. And where is the law and order? Are we no longer going to have law and order in this country? I mean, I know it's a TV show. Okay. You know, yeah, 401k is up. That's good. But how about spending? How about spending money? You being able to save money? Are you able to live as good as you lived before? I mean, that's the question. Window plan closing after more than 50 years. Money buys nothing. That's true. Okay. Again, it's just everybody's got their own. This is yes, I'm frugal. Everybody's got their own way, right? I mean, again, I think that a lot of people are having to work multiple jobs. I think a lot of people are struggling. Again, I think we're having a wider disparity. And of course, we continue to have this Federal Reserve, which is doing way more than they're supposed to be doing because they're not supposed to be doing all this, but they continue to get involved where they don't belong. Okay, they've got two jobs. Okay, if you read the mandate, which is jobs and price stability, not stock market stability, price stability. Okay, but you have a market that has run up based on potential rate cuts. Now again, you look at Tesla and making a nice little move here, but that's not where I was actually going. I mean, the S&P, here we are, kind of like a little bounce from oversold right back there. Will there be a fall in U.S. stock market before 2030? Will there be a fall? I don't know. I would bet there would be. I mean, if you give me that kind of leeway, 6 years, I'll bet you there's a 50 to 60% haircut somewhere in between there, between now and then. I mean, again, will there be? There's always a fall at some point. Doesn't matter. We've had many collapses over time, and of course, if you remember that the markets go up 8.5% year over year in history. Okay, it doesn't matter what happens in between then and now, but I would suspect. I mean, I would say this: I would bet there'll be a 50 to 60% haircut between now and then, and it wouldn't surprise me if by then we're up an average of 8.5% year over year, even with a haircut in the middle. So I don't know. I mean, I'm not in the business of predicting markets. I'm in the business of reading them and reading the footprint that it leaves me. And right here, if you would have been a buyer down here, that I said that you should be a seller of put spreads. Okay. Last week when I gave out the levels. And did that help anybody, by the way, when I gave out the levels last week? Was that worth me sending? We didn't have a call because I was in Vegas doing the show, but did that help at all? Was it worth it, or should I not do it in the future? So again, markets are very oversold. We're getting a bounce. Now, is this a great bounce? Is this a bull? Is the bull market back? We don't know yet. Okay. Based on anything you look at, you would have to think that we'd have to get it back up to about 5,200 in the S&P before there'd be a rally again, before it'd be a real rally. But again, I can't say that for sure. But all we're seeing here right now is relief. Okay. All we're seeing now is a relief rally. Okay. And at the end of the day, we'll have to see. Again, nobody knows the answer, but certainly the case can be made that the trend is still down. Okay. Again, just look at it. But at the end of the day, we're not trying to predict into the future. We're trying to get on board whatever the trend is showing us, whatever time frame we're trading, and that's really what it comes down to in the market. I mean, I think that there's a lot of other concerns that should be out there. I think there's a lot of other concerns with the economy, and again, if you look at the overall majority, it's 4 o'clock. There's a lot of things going on. So, look, at the end of the day, I can just say that the markets look like, you could say they're in consolidation over a longer period of time. You could break it down any way you want. It all depends on what time frame you want to look at it at. And that's really what it comes down to. I think that, again, you have to get out of the habit of listening to the idiots on TV. Of course, I am one of them on TV, but I'm not an idiot. I just tell it like it is and like I see it. I'm not trying to get anybody to raise money. I have no agenda. I'm just telling you what my positions are. Okay. You've got to quit reading the news, because by the time you get the news, it's old. You have no chance to act on it. I'm a jackass too. Thank you for filling in for Connie, because she would be calling me a jackass. Oh, she's back. No, she'd be calling me a jackass too. I know she's driving and listening. I hope she didn't pull off the side of the road when somebody else called me a jackass. That's her pet name for me. But again, at the end of the day, it's just being able to discipline yourself and read the tape of the market, which is the chart. Okay. When I was a floor trader, we didn't have time to look at charts. You had to read the tape. Okay. You had to see the prices going on. And, again, there's a lot of things going on. I don't know if it doesn't look like that after this trial is over, Trump's going to face another trial to the election, according to the Supreme Court. Now, who knows what's going to happen there? Okay. But I think one note is, the banks seem to be in a little bit of trouble. Okay. Now, again, are they in trouble? I can't say that. I just say that, in my opinion, they're over leveraged. And, if they have to continue to talk up what good a shape they are, and they keep telling us how good the economy is, I mean, I would bet you, I'm not going to do it, but I would bet you if I took a vote here on how good or bad the economy is, I would say that it'd be overwhelmingly that it's bad. Okay. But again, I'm not interested in that. So we'll see what happens. Look, there's a lot of things going on. We got a big week. You got FOMC, which is the Fed Open Market Committee, Wednesday, which I'm assuming they're going to tell you that they're not cutting. Okay. But that announcement always, unless it's a surprise hike, okay, that always comes down to the notes that when he goes into his interview, okay, because that isn't scripted. Okay. So we don't know what is going to be asked. So that's not scripted. And of course, then there's a Jobs Friday. So this is a big month that we're going into remember the old sell in May and go away. But in the meantime, obviously that's a bunch of bullshit. But in the meantime, and we got the Kentucky Derby this week. So I'll give you my selections when we're done. But in the meantime, Kenny, are you ready, big boy? You ready to rock and roll? All right. Then thank you very much for doing this. Appreciate it. The dollar, which we don't trade the dollar only because it's too expensive for us to trade through New York. Other than that, we would trade it, but we would, if we had a position, it would be long, and it is holding its support level at 105. You're going to see that a lot of the levels are the same as they've been for the last 3 or 4 weeks, 105 to 107 in the dollar. Okay. Now we don't hold a position in. I will tell you what we hold a position in and what direction that is. Now, the one caveat you're going to have to remember is that we do go flat. Okay. Every morning I send out a special update for those who trade those models, and we do go flat. And so I'm only giving you what the trend is. It doesn't necessarily mean that will be my position tomorrow morning. Okay. In the meantime, the dollar, we would be long, but we don't trade anymore. The euro currency, 6 Echo, Okay, we are short. Okay, and we were flat today, but we would be short. And again, this is very similar to the indexes. Got oversold, bounced back up, but it would show you that probably 106 is your support level. Okay, and 108 is your resistance level. All right, so 106 to 108 in the euro currency, and the notes, they were higher today, but again, you're seeing relief off of oversold conditions. The 10-year notes are now, I think that last I looked, they were 4.7. Let me just give you the accurate 4.61, 4.61, 4.61 to 4. Okay, and I think they're going to 5% before the year's out. Okay, so, but in the meantime, you can see pretty clear support about 107. Now, we're not a buyer, we're short, so I'm only looking to sell, but the levels would be 107 to 109. If you really want to get aggressive, and I don't advise it, and I'll tell you why in a second, you can look at 108 if you want to. Looks like a pretty good solid resistance as well. But I wouldn't get too aggressive here because you do have two very big numbers plus others coming out. But the FOMC and the jobs are going to affect the bond markets in big numbers. Now, you could be on the right side or the wrong side. So I would be much more cautious at how I play the bond market this week. Okay. I mean, you still got till tomorrow, but I'd be very careful because you could see some wild, crazy swings over the next few days based on this. So, but in the meantime, 107 to 109, if you want to take an aggressive shot, you can look at 108, which we're very close to. The bonds themselves, the 30-year, same thing, right? You've got 112 to 118, a bigger range because these are wilder and they're really not as consequential to markets as the 10-year. The key interest rate benchmark to look at is the 10-year notes. That's what mortgages are based off. That's what everything's based off of. And of course, the 30 is just so the government can borrow money. Why we don't have a 100-year bond yet, I don't know. But we are short this as well. Okay. And Bitcoin, which we are short. Okay. Again, I think Bitcoin's a real thing myself personally, but I'm still short it in my trading account. I do own some. But again, I think you're still looking at the same thing, 60,000 to 76,000. That has not changed. Okay. And you got to remember that all you're seeing is a market going back and forth. Okay. It is in the perfect definition of a market that is consolidating. Okay. The one thing that I would be concerned about with Bitcoin, I said it was going to 60,000, and there it is. Okay. Now, again, I'm not saying I'm a genius, but the one thing I'd be concerned about is this high here and then a lower high. That would bother me as a trade, which is why we're short anyways. Okay. It does look like there's some room, but I'm going to give it 60,000 as a hold, and we'll see what happens from there. Remember, when I give you a level, it doesn't mean you buy or sell at that level. You have to, once the level hits, you need to evaluate what is happening around that level. Does that make sense? Okay, you got to make sure you check the price action when that level comes into play. Okay, in the meantime, 60 to 76. Gold, Golf Charlie, which we're long. Again, there was no doubt that there was going to be a little bit of a pullback. I think it's interesting how it's trying to force its way back up. But again, really, in the real picture, it was a big sell-off that's seeing a little bit of a rally, and there is not much volume to go along with this. So I like gold. I think it is going higher. But again, I said 2 weeks ago, I wouldn't be surprised if it traded 2,300, which it did. And I wouldn't be surprised if it makes new highs this week either. This is another product. You know, a lot of these products are very big, especially when they're thinly traded on these numbers. Okay. I think gold is really 2,300 to 2,450. 2,300 to 2,450. Silver has been kind of wild as well. Very similar action, right? Now, silver is still far behind gold right now, but again, I would think you're looking at 26 to 30 here as an overall picture, but 29 would be some resistance. But again, I'm a big fan of silver, and I think silver is just dying to break out to the upside. We'll see what happens. Again, I don't know that it's going to do that. I do think that there's a high probability that it will. Okay. And platinum, which we don't trade, but again, got very oversold, and you got a straight spike. I mean, truthfully, this would be a sale that I'd look at potentially to sell it, although, you know, I've always been a buyer of platinum. It's not liquid enough for us to trade, but I would suspect that, you know, one more update would probably be a sale, but I would think that the levels are 920 to 1,000. 920 to 1,000. Copper, which we're long, continues to mystify me. I have no idea what's going on with copper. Okay. I would have to assume that it's got something to do with what's going on with China, because at the end of the day, again, if you look at the economy and you look what's going on, it doesn't make sense that copper is going up so rapidly. Okay, but it is, and we're long, so it's it's not like it's hurting us. Okay, but I don't. There's the only trade I can think of here, and I will be looking at this tonight and into tomorrow morning. If copper spikes again tonight or tomorrow, okay, and I can get a spot to sell it, I'm going to short it for a trade. Okay, this is Ash. This is a blow off almost. It's only a blow off for the last 5 days if you go back. But if we get a spike higher, it's been overbought for weeks. Okay, there's going to be a pullback. Okay, now again, I don't know how deep it's going to be. That's why I'd like to see a sharp spike overnight, and I'd like to sell it overnight. Just again, from my perspective as a trader, not as a portfolio model, but it has gone bananas straight to the upside. I would think that you're looking at 475, which I'd love to sell it at if it can go there quickly. I think it's 450 to 475. You can see how we made a new base here at 450. Corn, just nothing. Grains are the biggest nothing, and there is actually more to the story of China taking things over. Kind of a scary situation, but we'll see. In the meantime, we're long corn. It's 425 to 450, but there's really zero action happening. Soybeans, which were short. Okay. There's really little action here either. They're both kind of stuck in a deep consolidation pattern, which only tells us that there's a much bigger move coming. Okay. And the much bigger move, which way will it be? Well, in my opinion, it'll be higher. It had nothing to do with my position. In my opinion, it would be higher. Okay. But for today, it's $11.40 to $12. Okay. And wheat, which again, this is what I expect in copper, just so you can get a comparison. Wheat went straight up, was overbought, and then finally walked in this morning, it was down 16 cents. Okay. Now, again, it doesn't sound like much, but it's a hell of a lot of money you could have made if you were short. Okay. But it was extremely overbought. These parabolic moves can never muster enough because markets cannot move in that direction. There's not enough money to continue to push. Okay. I would think that you're looking at now, I think 640 has showed its level as the resistance, and $6 is support. 6 to 640 would be the levels I'd be watching. Okay. And we are long wheat. Okay. But I would say that would be the levels I'd be watching. And I would buy more at $6 if it holds there. Again, I got to see how it's trading there once it gets there. Cattle came down a little bit, but again, so far, my prognosis here has been dead wrong. Now we don't trade anymore, but personally, I always disclose my own positions as well. I've been short cattle. I've stayed short cattle, and I'm going to stay short cattle. I don't understand it. I can't understand the logic behind it. There is no reason for it to be up at these levels. And I do have history on my side because I do remember the last time they made all-time highs like they did here, and I do remember the end result. Okay, but from a straight chart point, we were overbought, so you would expect a little bit of selling. I would think that 180 remains the resistance level, and I think 170 remains the overall support. But right now, if you want to be a buyer, you can look at 175. Okay. Feeder cattle trying to work its way higher again. And what is supporting the feeder cattle market right now is the low price of grains. Okay. If grains would do what they should be doing based on the other commodities around the globe, grain prices would be much higher and feeder cattle would be much lower. But in the meantime, they're not. And that's what you always have to remember. Okay. The market is always right. Whatever this is telling me, it is overbought. Okay. I would certainly look to want to be a seller around 252 if given the opportunity. Okay. And I think support's around 236. Okay, which is the same level. You can look at 244 if you choose. If you're a player, and some of you don't play these markets, so it doesn't really matter. Hogs, I gotta get the right month up here. I don't know why this lousy platform. This is the one thing they do not do well. Okay, they do not have the right month up. Okay, June is the right month, and you can see basically you had the big spike up. Jesus, it's like copper. Then you had the big fall down. Now we found some consolidation, some support. We had a bounce back up again, and here we're back down again. So again, you're getting back to the oversold condition probably a rally coming. I think that you're $1 to $1.10 would be the levels I'd be watching here. Okay. Again, I don't think I think that there's a greater chance of going higher. You've got in hogs, they can go higher through the summer, and then typically you get to October and December they start to go lower. But we'll see what happens. In the meantime, $1 to $1.10 or 100 to 110, Ken, for you it doesn't matter. I mean, that's the actual price is $1.10 a pound. Natural gas, which has been a pain in the ass. Okay, we're short. Okay, it popped a little bit. We were actually flat today. Again, this is very overbought. This is something that if this opens higher again tonight, I'm probably going to sell it. Okay, this is another one that's in that quasi type blow off type trade. And since the longer term trend is still down, to me, this is probably a selling opportunity. But I would mark the level up now at about 220. Okay, I think you're $1.80 to 220. $1.80 or 180 to 220. Okay. Crude, Charlie Lima. Okay. And we're still short crude, although we were flat today. Again, it's really just in a big pile of nothing. If you notice that most of the markets are just sitting in a big pile of crap, they're not going anywhere. There's no real movement or action, okay, that is taking us out of these consolidating periods. Right. So in the meantime, I think we're still 80 to 86. I don't think that's changed. Okay, and it hasn't changed for 3 weeks, so I would expect it to change now. Cocoa finally got clobbered, but I want to see something here. Just to, again, I keep up one set of jerseys. I don't actively trade cocoa. Let's just go to July. Yeah, it did get actually clobbered. Okay, so again, now look, this is not a trade you're going to make, and this is not a trade I want you to make, but just purely based on the chart. Okay, I would look at this as a potential buy off of a blow off, and I would say that I'd love to be a buyer. It would tick down to about 85 cents or 8,500. And I think that resistance is still up in here in the 115 level. Okay. But again, the soft commodities are not for the faint of heart and B for active trading because there's not enough action. Most of the action happens when you're all still sleeping. And again, it's just easier to carry a position if you want to be involved. Cotton, okay, is hovered. Looks like it might have found a new bottom here. We called the first bottom earlier. Look, I would be long this here if I were going to trade it right now. We don't trade anymore, but I'd be long it here. I think that there's a greater probability that it goes higher than lower. Again, you have to base it on I can base on the chart, which looks like we're finding some support, but also based on what's going on in the rest of the commodities. For levels, Ken, use 80 to 84. Sugar, Sierra, Bravo, okay, which we're short. Little spike up on no volume. Interesting action. Okay. I think you're looking at 19 to 21 cents. OJ. Okay. Again, really tight consolidation. Okay. We're long OJ. But again, it's not going anywhere. And this is something you can't trade for sure. You can only use it in the portfolios. The soft commodities, basically, you have to be willing to hold a position. That's really what it comes down to. They're not liquid enough to trade actively enough. Okay. And coffee, which we reversed the short. Now it popped a little bit, but again, overbought, came down, now consolidating. I think the levels really haven't changed. I think the levels are still, 215 to 230. So, that really has not changed, even with all the action. And lumber, which nobody can trade. But again, it's interesting that lumber has been falling hard when coppers were going higher, because if you assume them both to be building materials, you would think that they would kind of go together, but they're not. And of course, lumber is well off of its highs from way back here. And of course, it doesn't make sense to me, but again, it does. The market doesn't have to make sense. I just have to be able to trade it and be able to translate those messages to you. Okay. So in the meantime, I think it's going to be a very challenging week to trade. It's typically slow right about now anyways. Now we do have obviously the first of the month on Wednesday, which does tend to bring in buying. Okay, you've got Wednesday afternoon, FOMC. You got Thursday, you got Friday, you got jobs. And is there any other big stuff coming out this week? Consumer confidence, ISM. Oh, what a day Wednesday is going to be. ISM manufacturing. That's big. That's the only number that I have any respect for. That's private. Okay, but In the meantime, we'll see. Does anybody have any questions on part one? Otherwise, I'm going to stop the recording and flip over to part two. But if you have any questions on what we covered so far, feel free to fire it in. Otherwise, I'm going to switch over and we're going to break this obviously into two recordings so you don't have to listen to me twice.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.